It's not all bad news. Business confidence in January improved and trading expectations followed suit. And the JSE followed global markets recently and posted its largest gains in almost 3 years. Local and foreign investors are getting excited about South Africa again.
They have seen South Africa through an uncertainty lens for probably the latter part of last year into this year. And there was certainly a change in sentiment after the ANC party election, when Cyril Ramaphosa was elected president of the ANC, and that we saw an uplift in the market. We saw movement from investors out of the bond market into cash equities, and we saw strengthening in the rand.
Ramaphosa has a strong pedigree with experience in trade unions, nation-building negotiations and a strong business slant.
So this is someone who really is going to be building those blocks which are critical for us, of community, of business and labor, in ushering an inclusive economic development strategy, which will then put us back to where we belong as an African economic giant.
Sentiment is what's driving the South African markets at the moment. It's a start.
There still is a long-term structural issue that the economy needs to have addressed. Of course, the capital position of the state-owned enterprises, the need for growth, the importance of poverty alleviation, and finding a way to have all South Africans benefit from growth.
As President Ramaphosa enters his so-called honeymoon period, he needs to prioritize several actions.
Importantly, first, a positive cabinet, remove all those that are involved in the state capture, including the Minister of Finance specifically, who we know very well is very close to the former president. Secondly, resolve issues around our tax administration, where we know that laundering has happened through the institution itself. More importantly, also bring business to the table, because they are pivotal for employment and growing the economy.
There's a feeling of optimism that's crept into the streets and the markets in South Africa at the moment, and hopefully it can be sustainable. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Well, let's delve further into the expectations for Ramaphosa as South Africa's new president. Patrick Bond now joins us in Johannesburg. He's a political and economic analyst from Wits University's School of Governance. Very welcome to the show, Professor. Now, Ramaphosa has been called a deal maker. He's also been called a negotiator. So what exactly are your expectations for his presidency? Should we expect some major changes in policy, especially in sectors such as mining?
Well, it's really good to be with you and the viewers, and I think that is the expectation, that mining especially will have a rebound. There was a major African mining indaba, as well as an alternative mining indaba of critics of the mining industry just last week in Cape Town, and a sense that as Jacob Zuma was being pushed out, surely but inexorably, as his mining minister, very unpopular, and he was connected to the Gupta family that's now on the run. There may be some arrests and new firings and a big set of shakeups in mining. But let's not forget the potholes. The enthusiasm is evident, as Angelo has just said. But next Wednesday, there's a budget speech to be delivered. We think it will be by the Finance Minister, Malusi Gigaba. Maybe that will change. But the dilemma is to find 70 billion rand in new funding that would cover a growing deficit, to bring the deficit down to the expected range below 3%. And that deficit's continuing to grow, and now there's another 12 billion rand. We're talking about $1 billion here that needs to be found to cover students getting their first year, this year, of free education, and even more in the future years. Will that require austerity? Will it require a higher value-added tax, which will aggravate the inequality in this country? Will there be other ways to raise money? These we will learn, and these are huge potholes.
Now, Professor, we've seen investors suddenly giving the new president the benefit of the doubt. If we look at the rand performance in the past few weeks, and suddenly the rise in business confidence in South Africa. But he is facing some tough economic challenges, as you mentioned. So what will be his toughest issues?
Well, I think it's actually the problem that he is an extraordinarily good deal maker. He negotiated much of the political transition as well as the constitution, as well as countless business deals. But he has now got a new opposition, which is the independent left. You've seen the economic freedom fighters wearing red in the parliament and promising that they won't keep trying to have the parliament dissolved, a rapid election, because they feel it doesn't have legitimacy. They're going to the courts. Maybe more difficult will be the largest trade union, the metal workers, which has just today declared war, saying that Cyril Ramaphosa represents the agenda of big business and that they've had enough of declining wages and high unemployment. They want to fight back. And it's that difficulty in what is, without a doubt, the most divided society in the world, the highest income inequality and wealth inequality, as well as the angriest workers, according to the World Economic Forum and as Price Waterhouse regularly surveys, the most corrupt business elites in our Santon central business district. And that makes for an explosive laboratory where a smooth, well-attested former student radical, former trade union organizer, former ANC Secretary General, and then developer of the Constitution, and then a big businessman with the McDonald's, with the Coca-Cola, with banking and other franchises, and then with the notorious incident at Maracana where he was implicated in both failing to get housing built for the workers and then emailing in a very embarrassing email demanding concomitant action against wildcat strikers, which led the very next day to 34 being killed. And he did apologize for those emails, but that still rankles an independent left that's quite vibrant, strong, and I think that will be his single biggest challenge, to find any sort of social contract in this exceptionally divided side.
Now, what then do you imagine will happen now with those ratings agencies? Could we see a halt in downgrades?
Yes, well, they should stall the downgrade process. Now, let's remember there are 3 rating agencies in New York. That's Standard & Poor's, Fitch, and Moody's. And Moody's comes up probably in the next couple of weeks to decide will they join the other 2, which last year made South Africa a junk-rated security for international investors and also local investors. If there's that 3rd junk rating from Moody's, that means a huge amount of funds, probably $100 billion from the Citibank Mutual Index, will then flee South Africa and will have returned to economic instability and probably a raise in interest rates and back into the long depression. I should add as well, the international economic environment is so volatile at the moment. So yes, the rand strengthened, that's impressive. It had been at 6.3 to the dollar in 2011. It then crashed to nearly 18 2 years ago, and now it's back to the 11.5 range, which is impressive. However, it is a volatile indicator. It's not one I would put much stock in. I would really look for whether there's major new foreign direct investment and local investment, because that's the critical question. While we have a huge amount of money in the stock market, we have 1.4 trillion rand, about 100 billion, 120 billion dollars in loose liquid funds by big business, not investing. They've got that in cash. What would it take? And my sense is that would require interest rates coming down, a lot more economic activity, and I'm not sure we're going to see that anytime soon because of the inequality, the general volatility. The export markets are very shaky. Yes, commodity prices are up, but a little bit, only about 10% from their very low levels 2 years ago. And it's a difficult time for Cyril Ramaphosa to take over. He's probably the most talented person the African National Congress government could put in, but in 15 months, if he hasn't solved these problems, and if the foreign debt then hits roughly this time next year, when major tranches are due on $160 billion foreign debt, then there may be big trouble, and he may have a difficulty in keeping the ANC above that magic 50% range.
Well, many thanks for your insights, Professor. We have to leave it there. That was Professor Patrick Bond, and he, of course, is joining us from Wits School of Governance.